Hi, and welcome to this course on economic indicators. Before we talk about economic indicators, let's briefly discuss why all of us need to study economic indicators, the impact of these indicators on financial markets, and the central bank's reaction to these indicators. In his book, Rich Dad, Poor Dad, Robert Kiyosaki talks about increasing your financial wealth by increasing your financial intelligence. Furthermore, he says that financial intelligence is made up of 4 technical skills: accounting, investing, understanding markets, and the law. The goal of this course is to learn a very essential technical skill that every individual must know, which is understanding markets. So what does understanding markets mean? By understanding markets, we mean understanding the economic factors such as growth, inflation, interest rates, and the impact of these indicators on the financial markets and the central bank's reaction to these indicators. One of the best groups of people who understand markets are investment bankers. Their very job survival depends on their ability to understand markets and make the connections. This is the knowledge that investment bankers acquire during their trading experience, and it is this technical skill that we will achieve by the end of this course. Let us now discuss what macroeconomic indicators are and who should be taking this course. In any country, macroeconomic indicators are statistics released by government agencies and the private sector that provide us with information on the state of the country's economy. An example of a macroeconomic indicator is the quarterly gross domestic product released by the US Department of Commerce. So how is this course different from simply going online to research macroeconomic indicators or reading a book on economic indicators? The benefit of taking this course is the different approach we will take to study these indicators. This approach that we take involves the use of an economic map. This economic map makes the linkages between the broad economic measures of growth, inflation, and interest rates and the economic indicators. Therefore, it is this economic map that will keep us connected to how the indicators mesh with the big pictures of growth, the financial markets, and the central bank's monetary policy. The objective of this course, therefore, is not to simply give you information on macroeconomic indicators, but additionally for us to make the connections between these indicators, financial markets, and the central bank's reaction to give us deeper insights on the markets and to profit from them. This course is for anyone who wishes to improve their financial wealth by increasing their financial intelligence, or for basically anyone who has a desire to understand his or her country's economic state. You need not have any prior knowledge of economics or finance, as this course will take you through the learning process by building your knowledge right from the basics. This course will begin with a brief introduction on the 3 financial market instruments: stocks, bonds, and foreign exchange, and the key factors that drive their prices. We also discuss some very basic economic definitions, which are essential building blocks to understanding the slightly more advanced concepts. The next section goes into the detail of how the gross domestic product is calculated and its importance in determining the country's economic health. The following sections thereafter detail the core economic indicators that fall within the 2 broad categories: gross domestic product and inflation. For each indicator, we discuss its composition, who publishes it, its release dates, its importance based on whether it's a leading, lagging, or coincident indicator, its effect on the stock, bond, foreign exchange markets, and the central bank's reaction to each indicator. We look at indicators specifically from the US for the following reasons. The US government agencies, private entities, and economists provide a vast amount of information on the US economy, probably more than anywhere else in the world. The US economy is one of the largest economies in the world, and the US financial markets are also one of the world's largest markets in terms of market capitalization and hence the most keenly tracked amongst all traders worldwide. While we study the indicators of the US markets and the actions of the Federal Reserve Bank, this same knowledge can be applied to any economy, financial market, and the central bank of any country. You could be in India, China, Brazil, Canada, from any country, and the concepts learned here are applicable in any economy. My name is Mikesh, and I have over 20 years of work experience, around half of which was in the investment banking division, primarily trading in the foreign exchange and bond markets. I have also worked at one of the largest investment banks in London on their algorithmic desk for over 5 years. In my initial trading days, I used only technical analysis to predict the markets, but I had always felt the need to know the underlying fundamentals driving the markets to make sense of the reason behind the trends. It is this training on fundamental analysis which investment bankers receive that I aim to bring to you through this course. In order to think like investment bankers or central bank policymakers, we need to learn how to make the connections between macroeconomic indicators, their impact on financial markets, and the central bank's reaction. This is the goal that we can achieve by the end of this course. Hope to see you in the next session.